Well, day two, what have we learned about the autumn statement? Let's start with the big picture. This is real household disposable income. It's basically kind of how well off we're feeling over the course of the last few years. You can see the level going up and up and up. Then you had the financial crisis. That's where that line ends. Now, had it continued in line with where it was going, that's where it would have been. But as we all know, that's not what happened. It flatlined. We had that kind of lost decade for growth. And I'm afraid the story now is basically another lost decade. Look at that line. That's the forecast. It's going to be flatlining. And the upshot of it is, have a look at the gap between the two of them. We're going to be 1/3 worse off than we would have been had that line carried on rising as it was before the financial crisis. That's quite depressing. It's worth offsetting that. The government is trying to do things to help out here. And when it comes to energy bills, look, the amount of support in the UK, that's the red bar there, and the higher these are, the more support there is, just money being kind of dispersed there, is greater in the UK, especially after this autumn statement intervention, than in any other country or major country in the EU. Worth saying those are cash numbers, so as a percent of GDP, it's slightly lower, but it's still really high. But offset against that is the fact that taxes are rising and more people are being dragged into higher rates of tax. And one way of looking at that is by looking at kind of who is facing higher levels of tax. So anything below the line is paying more tax, anything above the line is kind of getting a giveaway by your income level. So you're looking at earnings there. The further you are up there, the more you're earning. To give you an example here, someone at £62,000, they will take a £1,600 hit. Now, the line is flat all the way up into £124,000. So if you're on £124,000, that's also £1,600. But here's the thing, you probably noticed this already. Look at those boxes. For someone on £62,000, £1,600 is 2.6% of their earnings, compared with 1.3% of the earnings of someone who is earning much more. You see the point? It's the middle which is being really squeezed here. And another way of looking at that is at looking what share of adults are paying the higher rate of tax. It used to be quite a small proportion that were paying that 40p rate. Back in the early 90s, under 4%. But look at how that line has gone up. More and more people being dragged into that higher rate, so that now, at the end of the forecast horizon, you're talking about nearly 15%. So more people paying those higher levels of tax. It really was a tax-raising autumn statement, and that is the day two verdict so far.